A 12-month hold. Aurelius bought LSG Asia Pacific, held it for exactly 1 year, and flipped it. That is pure art.
That is pure impatience. But you are ignoring the actual elephant on the tape today.
$3.2 billion of Thai Telecom?
Exactly. Arise Digital just scooped up a quarter of TrueCorp. Telenor is cashing out, and I have serious questions about this valuation.
I still think the quick flip is sexier, but fine, show me the telecom math. The rundown, $710 million in a fresh war chest, and Bending Spoons decides to buy a dog collar company.
Tractive is pet tech, Nate, and if you actually look at the churn rates on pet subscriptions, they're practically zero. People will cancel their own health insurance before they cancel their golden retriever's GPS tracker.
Okay, fair. It just feels like a weird flex for an Italian app developer, but fine. I'll concede the pet economy is bulletproof.
Speaking of bulletproof, or trying to be, Sun Life Financial just finalized their massive alt investment push.
Right, the real estate and credit spree.
Exactly, 1.59 billion Canadian for BGO and another 829 million for Crescent Capital Group. They're going hard into high-yield alternative credit.
It's the classic insurance playbook right now. You need yield, you buy the yield managers, but honestly, the deal that actually made me laugh today was the Aurelius flip.
The LSG Asia Pacific sale.
Yes, they bought it, held it for barely 12 months, and just flipped it to a Japanese consortium. Deal makers in the corridors are drooling over the quick flip premium. It's just brilliant banking.
Oh, come on. It's not brilliant banking, it's a distress trade. When you flip an asset in a year, you either stripped it to the studs or you found a buyer desperate for geographic expansion. You don't build actual enterprise value in 12 months.
Disagree. If the market gives you a premium, you take the money and run. Why hold for 5 years just to prove you can operate a business?
Because I prefer actual operational turnarounds over financial engineering.
Spoken like a true former journalist?
I'll wear that badge. Look, if you want a genuinely strategic play, look at Mondays. They're doing a classic creeping acquisition on GetLink.
The channel tunnel operator.
Right. They just announced a 3.5% initial stake, but the filings show they're aiming for 9.5%. They're just testing the regulatory waters before they tighten the grip.
I love a good strategic squeeze. We should keep an eye on the wires tomorrow to see if they get the green light for that extra 6%.
We also need to watch the SEC filings tomorrow for REPAY. They're shelling out $372 million for KUBRA Data Transfer, and I really want to see the financing structure on that one.
Cash and debt, Maya. It's always cash and debt.
I read the footnotes, so you don't have to, Nate. But speaking of massive numbers, we need to talk about the real blockbuster today. $3.2 billion changing hands in Southeast Asia.
Arise Digital making an absolute splash in the telecom market. The big one. $3.2 billion for a quarter of a Thai telecom company. My former MD would have spilled his espresso all over his tie if a pitch deck with that number landed on his desk.
Almost a quarter, 24.95%. You know exactly why it's 0.95, right?
Keeps them right under the threshold to avoid triggering a mandatory tender offer. Classic banker geometry.
Exactly. Arise Digital is writing a $3.2 billion check to Telenor Thailand, but they're staying a hair under 25%. It's brilliant regulatory gymnastics. But honestly, I hate the valuation.
You hate every telecom valuation.
Because they're pricing it like a software company. True Corporation is a massive incumbent. They do mobile, they do broadband. This is utility money, not hyper-growth SaaS money. Arise is paying a staggering premium for a non-controlling stake where they can't even force a dividend recap.
I disagree entirely. You're looking at this like a legacy cell tower spreadsheet. Arise is looking at the entire Southeast Asian digital infrastructure map. TrueCorp is the gateway. You lock up 25%, you get strategic veto rights, and you effectively block any competitor from taking control of Thailand's digital spine. It's a defensive moat as much as an offensive play.
But Telenor is the one cashing out here. If this gateway is so incredibly valuable, why is the Norwegian telecom giant sprinting for the exit? I went back and read through Telenor's last 3 earnings transcripts. They've been quietly complaining about massive capital expenditure requirements in Asia for 18 months. They wanted out of the capex trap.
Sure, but Telenor is a traditional operator. They want predictable yield. Arise is a digital infrastructure player. They see data center integration, edge computing, enterprise cloud. They don't care about the consumer mobile margins. They care about the pipes.
I just can't get past the price tag. 3.2 billion for a minority stake where you can't even force management to change the cafeteria menu.
You don't need to change the menu when you own the roads the delivery trucks use. Arise just bought a massive, unreplicable asset. And honestly, Telenor gets a fantastic exit multiple. It's a rare win-win.
We'll see what the public markets think when Arise actually has to fund those data center build-outs. I still think Telenor found a very wealthy greater fool.
A $3 billion fool. I really miss the advisory fees on deals like this. Can you imagine the success fee on a cross-border telecom print that size?
I'm sure the advisors are buying new boats as we speak. Speaking of massive checks and shifting strategies, Sun Life is suddenly deciding they want to be a real estate and credit titan.
Oh yes, the great Canadian alternative investment pivot, $2.4 billion, says they're dead serious about it. Voices? I'm so tired of analysts calling every minority stake a classic strategic squeeze.
You mean the Monday's note this morning?
Yes, they take an initial 3.5% stake in GetLink. They announce they want up to 9.5%. And suddenly everyone is screaming hostile takeover. It's literally just buying stock.
I actually disagree with you on this one. It is a squeeze, Nate. Look at the asset. We're talking about the channeled tunnel operator. You don't just casually buy near 10% of critical European infrastructure for the dividend yield. You're putting a foot in the door to see if the regulatory alarms go off.
But calling it a squeeze implies they have leverage right now. They're just testing the water.
Testing the water with a sledgehammer, maybe. Let's see if they actually get the green light for that extra 6% tomorrow.
Okay, fair. What about the Sun Life commentary? An aggressive pivot towards high-yield alternative credit. They just spent 1.59 billion Canadian dollars on BGO and another 829 million on Crescent Capital.
Aggressive pivot is a polite way of saying they looked at their traditional fixed income returns, panicked, and bought a massive real estate and credit portfolio to compensate.
Spoken like a true skeptic. But you have to admit, seeing these legacy insurers suddenly acting like buyout shops is highly entertaining. Speaking of private equity, did you hear the whispers about Aurelius?
The LSG Asia Pacific flip?
Flipped it to a Japanese consortium exactly 1 year after buying it. Just an absolutely shameless, beautiful, quick turnaround.
I'm dying to see the premium on that. A 1-year hold usually means someone drastically mispriced it the first time around.
Or someone drastically overpaid this time. My banker heart loves it.
Well, my journalist heart wants the receipts, just like I want the SEC filings on REPAY. They're shelling out $372 million for KUBRA, and I really need to see how they're actually paying for it.
We should have those financing details by tomorrow morning. Spill the tea. Okay, but can we talk about the sheer audacity of Aurelius right now? 1 year. They held LSG Asia Pacific for exactly 12 months before flipping it to a Japanese consortium.
I respect the hustle. Why hold an airline catering business when you can take a quick flip premium and run?
Because it makes them look like day traders, Maya. You are supposed to be a private equity turnaround shop, not a house flipper on basic cable. The ink on the original purchase agreement was barely dry.
Oh, come on. If someone offers you a massive premium 1 year in, you take the money. Don't give me that noble banker holding period nonsense. You love a quick exit. A win is a win.
Fair. But the whispers I am hearing say it is less about Aurelius being geniuses and more about buyers absolutely panicking for Asian assets.
Speaking of panicked buyers, did you see the feeding frenzy around Geomatic?
HG exiting to Axel?
Exactly. Infrastructure software is the new golden child for buyout shops. Everyone wants recurring revenue tied to something incredibly boring, like underground utility mapping.
Boring is beautiful right now. Boring pays out a 3x multiple.
Wait, really? 3x on Geomatic?
That is the rumor in the London corridors anyway.
Let me see the actual footnotes before I believe a 3x return based on gossip from a PE guy at a pub.
You wound me. But fine, let's talk about someone who's playing a slow, very public game Mondays.
Oh, the GetLink squeeze. This is textbook corporate theatre. They bought 3.5% of the channel tunnel operator just to test the regulatory waters.
And now they are pushing for 9.5%. Classic creeping takeover. They are wedging their foot in the door so nobody else can close it.
I love it. It is aggressive but structurally brilliant.
We will see. Let's watch what the regulators say tomorrow when Mondays actually asks for the green light on that extra 6% stake.
I will be refreshing those regulatory wires. But speaking of massive structural plays, Arise Digital just dropped 3.2 billion in Thailand, and we need to unpack that telecom math. Tomorrow's radar. Senori Brothers Abhasitis.
Mondays is playing a dangerous game of chicken with European regulators tomorrow.
Dangerous? Oh, come on. It's a textbook strategic squeeze. They grabbed 3.5% to test the waters, and tomorrow they ask for the green light on the remaining 6% of GetLink.
Creeping acquisitions on the channel tunnel operator. Regulators hate feeling like they're being slow-walked into a buyout.
They don't care about feelings, Nate. Mondays knows exactly where the antitrust line is.
Spoken like someone who's never had a deal blocked on bad vibes alone.
Fair. But while you watch European regulatory theatre, I'm refreshing Edgar for REPAY's SEC filings.
The $372 million KUBRA deal. You think the financing is ugly?
Paying that much for a bill payment platform right now? The debt structure in those footnotes is going to be an absolute horror show.
I love a good financial horror story. We'll read the filings so you don't have to, and we'll catch you tomorrow.